Good day, YouTube. This is Jay Money with Falling Forward Financial. I just wanted to make a video on this particular article. I've talked about one or two of these before. 3 electric vehicle stocks to buy during the market sell-off. As you can see, this was just out yesterday. So we have Texas Instruments. I've talked about them once or twice. Volkswagen once or twice, and NPX Semiconductors. I don't think I've talked about that one here on the channel. I've talked about some other semiconductors, Intel, AMD, NVIDIA, and but if I find those, I'll link those in the description. So, but with some money changing and money flows shifting to new suppliers, there are opportunities for investors to make some money. Patience on the time will be required. So we have Texas Instruments, ticker TXN. Volkswagen, VWAGY. I did, I'll show you on Robinhood. You can get that one on Robinhood, even though it says it trades over the counter. And NXPI. So, but when I think of Texas Instruments, I think of the old calculator that I used to use in school, but it's much more than that. They're currently at $165.61. Here you can kind of see what they've done or haven't done over the last year. They've came down, had a dip by and ran up, but it's still kind of down a little bit. So $151 billion market cap. Texas Instruments is deeply embedded in the global auto industry, a supply chain. Decent chance that one of your vehicles utilizes components from Texas Instruments, and as the modern car evolves. So what's so great about their electric components and chips are expected to go from about 40% of the cost to manufacture a car today to upwards of 50% by 2030. In other words, Texas Instrument top markets has a long roadmap of growth ahead of it. Exactly the type of trend you want for a long-term buy and hold stock. So that's typically what I do, buy these and hold them for 2, 5, 10 years. This one, if I were to buy Texas Instruments, I'd probably be holding it for 5 to 10 years. That's where you're going to see your biggest return out of anything related to EVs. So why buy it now? A recent sell-off, its shares trade at 18 times a trailing 12-month earnings per share, or 25 times enterprise value to a trailing 12-month free cash flow. This is still a premium price tag, but it's near the low end of where the stock has traded over the last 5 years. Free cash flow has dipped as of late, but that's because TI is spending right now to support manufacturing expansion in the coming years. So one definitely thing to look into is EVs. So they have a long history, study of highly profitable growth. Free cash flow averaged 12% a year, expansion since 2004. The company has doled out a rising dividend every year since then. So I know 2 of these have a dividend. We'll have to check the third one, but you can get a 5% yield with a special dividend kicker while playing the EV transition. Next is Volkswagen. They may have the best shot of competing with Tesla, another upstart EV brands. Moreover, the stock looks very cheap at the moment, just 5.8 times earnings and a 3.9 dividend yield. Preferred shares under the ticker, and that's wrong, it should be VWAGY, are even cheaper, trading at 4.4 times earnings and a 5.1 dividend yield. Currently at $20.44, a $88 billion market cap. And I did bring this one up on Robinhood here. So as you can see how far they are down in the past year, down over 32%. Actually green in the past 3 months, green in the past month, 13%. And here's a look at the last week, 5.3 in the green, and green here again today. So excluding the last year, they are on the way back up. You do have an ADR with this one. It's American Depository Receipt, represents shares of non-US based companies. And you can see the typical fee there. I've had some ADR stocks some ADR stocks here on TD Ameritrade, and I've gotten like a $38 ADR fee. I have yet to get one on Robinhood, so I always like to point that out. So if you're watching these videos, I don't give tax, legal, or trading advice anyway, but if you buy these and end up with a $38 fee, don't yell at me because I'm pointing it out right now. And again, Volkswagen, some of you watching this, listening, might have a Volkswagen, but they're in passenger cars, light commercial vehicles, been around since 1937, $91.5 billion market cap, high today of 2046, low of 1941, 52-week high of 3464, and a low of 1680. 2.67 dividend yield, and not a whole lot of volume on this, 700,000 on average, and 885,000 here today. So, and here you can see a lot of them are actually up today. So, a lot of car manufacturers. So, but continuing with Volkswagen, so the company gets the majority of its profits from its luxury brands. Porsche, which accounts for a sports segment, accounted for 25% of Volkswagen's operating profit alone in the first half of 2022, while the luxury segment, which includes Lamborghini, Bentley, Ducati, and Audi, accounted for another 39% of profits. Only other pure luxury car brand is Ferrari. I think I've talked about them once or twice. I think their ticker's RACE. Maybe we'll find it here. Trades at 40 times earnings. Porsche and Audi may not quite attain the luxury brand multiple, but I don't see why Lamborghini and Bentley couldn't achieve something similar. So, given the myriad concerns in the market about going public and Europe specifically, but if the IPO eventually goes through, management plans to dispense 49% of the proceeds to shareholders in a special dividend, with the rest going toward Volkswagen EV transition, which is already well underway. So battery-powered EVs are set to make up between 7 and 8% of Volkswagen's total vehicle sales this year, up from 5.1% last year. Meanwhile, the company is also ramping up 3 different battery plants this year, 2 in Germany and 1 in Chattanooga, Tennessee. So the newest Volkswagen is about to hit U.S. markets and will retail a very reasonable manufacturing price of $41,000, significantly lower than the Tesla Model Y, starting at $67,000. That's especially cheap for an EV, especially if U.S. consumers can qualify for the new $7,500 tax credit. That could do quite well, so we'll just have to wait and see. Next, I never feel you can go wrong with semiconductors. They're always should be going up as long as the business is in play and doing the right things, and they usually do give a dividend as well. So, but it says here, I sold most of my Tesla stock recently, and I'm interested in picking a winner. Barely born a market for electric vehicles. At the same time, I own one stock that gives direct access to the whole auto sector, with a heavy emphasis on ultra-modern vehicles such as electric cars with self-driving features. That stock, NXP Semiconductors, which has been a leader in car-based semiconductors for the last year, currently at 161.23. So you can see they were probably at the 230s about a year ago and been coming down. So hit that low and then going back up along with everything else. So, but every vehicle is packed with semiconductors these days. Microchips control the engine, the navigation system, in-dash infotainment feature, and other visible features around the car. They also collect data from sensors in the engine and around the car's body, analyze that data to just the vehicle's performance, and make sure your cruise control won't make you hit the sedan in front of you. So, very cool technology. So, light at the end of the tunnel. NXP saw automotive chip sales rise 36% year over year, so that's always a bonus. in the second quarter. So always room for growth. So always going to be room for growth with some of these semiconductors, but at the time, NXP stock has fallen more than 30% in 2022 and trades at a miserably price-to-earnings ratio of 17. The company's long-term future is downright thrilling, and tempted to add a few more shares, so just as myself. But if you have any of the three of these, NXPI, Volkswagen, or Texas Instruments, you can list that in the comments as well. And if there's any other semiconductors or any other EVs out there you want me to take a look at, I've pretty much covered them all, not 100% of all of them, but quite a few. And you get a dividend on this NXPI as well. So there's 3 stocks related to EVs that you can get dividends on. And this one's also down quite a bit over the past year, and kind of going up and down here at times, but having a green day today. So, but like I said, if you have any of the 3, here's their tickers again. You can list that in the comments, and if you have any other favorites, you can list that in the comments as well, and I can see what I can do to turn out a video about those. If you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos launch. Again, this is J Money, Falling for Financial. Happy trading, happy investing, stay green. Cheers.